This morning we had earnings from United Health Group, which dropped sharply on the number. We'll talk about that. Another stock that I own, which is PayPal, is down big today. Could this possibly be a buy the dip opportunity? And Spotify Technology down over 8% at the time of recording this. And earnings season is heating up this week, with Wednesday bringing us Microsoft, Meta, Qualcomm, ARM Holdings. Their earnings are coming in hot. And don't forget, on Thursday, we have Apple and Amazon and MasterCard all reporting as well. To finish out the week, on Friday, we have ExxonMobil, a stock that I own, and Chevron. And despite some of these movers lower here this morning, we still have the stock market in an upward drift that doesn't seem to want to end anytime soon. In today's video, I'll be going over some of these stocks and whether or not I think that they could be buying the dip opportunities. Stay tuned, make sure to hit the thumbs up button and subscribe if you're new. Let's get into it. So first, a quick look at the SPY here from a technical perspective. Still very clearly an upward trend. However, I do want to take note of the slowing momentum. What was a very sharp bounce back from the April lows, which continued for a while, seems to be starting to sort of slow up just a little bit. And I don't necessarily think that this means that we have to have some sort of monumental drop, but I do think most likely the forward returns for the S&P 500 are less likely to be the same trajectory or so strong that they were during this time, right? You had such a sharp bounce back because many investors thought the world was going to end with all the tariff stuff, but going forward now, everybody kind of expects the market to do well as you have trade deals everywhere. You have, the Trump administration talking about less regulation and tax cuts for businesses. So these things are perceived as very positive for the market, not to mention that people think that the Fed is going to cut rates this year. That's a strong catalyst for stimulus in stocks as well. But the problem that I see is when everybody is already thinking that the market is going to do really well, the forward-looking returns are oftentimes less attractive. When you buy the dip and everyone thinks the market's going to go to HE double hockey sticks, and then it doesn't, the market bounces sharply. The risk to reward profile makes a lot of sense. This is why I typically prefer to buy stocks when they're down. And speaking of stocks that are down, take a look at United Health Group. This stock has dropped tremendously in the last several months here with all the headline drama going on with, United Health Group. We've actually just seen their earnings report come out, which was a miss. You can see reported 4.08 compared to estimated 4.48 per share. So a big miss there. Revenues came in mostly in line with expectations, and this just pummeled the stock even further. At the time of recording, the stock is down 5.25%. $267 per share. But I want to show you something crazy because I actually placed a trade on UNH. So what you're looking at is my Webull portfolio, which I'll leave a link if you want to check out Webull down below in the description. I actually sold a cash secured put for the 250 strike price ahead of earnings. Now, if that sounds insane, that's because it kind of is, and that's why most people want to actually buy puts to protect themselves. If they own UNH, they want to buy some puts as insurance. But me, in my options trading, I actually prefer to sell options, and I prefer to sell cash secured puts. So what I did is, even though the stock price has actually gone down, you can see that my position is up $100. And this is pretty incredible, and why I love options is the stock price has gone down, and yet I have sold these puts, which is a bullish perspective, and still I'm up on the position. Now, I'm not up a lot, and I think that we could still see this thing continue to move lower, in which case this could become a losing position for me. But this is the beauty of selling options when people think the market's going to make a huge move. Did UNH make a big move? Yes, but many people probably thought the stock was going to drop way harder than it did, and so the options, the implied volatility has dried up since now that the earnings report is out. People are not expecting as big of moves on UNH, so that is why my position, even though the stock price has moved lower, the implied volatility crush that's kind of occurred on the stock price's volatility has actually gained me some positive P&L. Both the volatility crush and the theta decay, since I sold these options and time has passed, these options are less valuable, putting me in a position in which my position's actually up $105. So From here, is UNH oversold? I think it is, but I would actually be potentially happy to buy the shares. If we keep dipping lower, I actually kind of hope we do, because what this would mean is I would buy the shares around 250, in which case I think I'd be getting a good deal. And now I wanted to look at some of the financial metrics on our stock analyzer tool here within the stock box. If you want to try out this tool, the link will be in the description down below. So if I take a look at UNH, which I've selected in the top right, please note this is also still in beta version. We're still testing this process here, but I just wanted to go through some of the metrics here from a financials perspective. With the stock price dropping so aggressively, the stock has become much cheaper relative to its historical average valuation. Usually it trades around a 21 times its earnings PE ratio. Currently it's trading under 12. So what we're seeing here is the stock is being priced relatively cheap compared to its overall earnings. And so there is a good reason for this. There's speculation that the stock, should continue to go lower. And that's why, of course, the price, the valuation is much cheaper than historical averages. But this is still a company that produces very strong overall profits. And it's a company that I think in the long term should do really well. So what our tool has done here is we have several metrics like PE ratios, both forward and trailing. You can see both of these statistics are lit up in green because they are perceived as cheap relative to their 3-year history. The price to sales, we have debt to equity, we have revenue growth, we have earnings growth, which again, is showing some errors here. Like I said, still in testing mode, but I wanted to show this as an idea. Their return on equity, their profit margins, and their gross margins. United Health says 2025 earnings will be worse than expected. Costs of care continue to rise. United Health Group reports mixed second quarter earnings, but sees earning growth in 2026. But to summarize, United Health cuts the outlook again and braces for more high costs. People are not loving this, and of course, that is part of the reason why the stock is down today. And so now the big question, when it comes to UNH, which has been sold off heavily, is this stock a buy? Well, of course, as always, this is not financial advice, but my personal opinion is I do think that we're getting some really good discount prices for a longer term buy in something like UNH. Another similar story, which is CNC, has dropped substantially as well. And I've actually had some subscribers ask me to take a look at this stock as well. The warning I would give with stocks like this is you are sort of playing with fire and you're talking about a falling knife. And you know the old saying, never catch a falling knife in markets. I do think that there are times where you can buy stuff that has been left behind and oversold. But with UNH, my position sizing is going to be small as to not put myself in a troublesome position if we do continue to see the stock slide down to something like $200 a share. So I'm establishing a position, as I mentioned, if we can go down to 250 through a cash secured put that I sold. Another stock that I own and reported earnings today was PayPal. PayPal today is down 7% on their earnings report. So the question now, is this a buy the dip opportunity? Well, for me personally, this is one that I like even more than UNH. PayPal is down sharply today, but several of their metrics look very healthy to me. And some people don't know this, but PayPal actually also owns Venmo, the very popular app that people use to send money to their friends. When we look at the financials of this company, the trailing 12-month PE ratio is under 16, which compared to the 3-year average of 18.7 or so, to me seems like a pretty good deal. Although their earnings report was not very exciting this morning because PayPal reports slow growth in key margin figure even as earnings topped their estimates. So they did have good earnings, but the stock still fell due to some of the specific growth metrics within the earnings report. I know that sounds confusing at first. Let's keep going. PayPal earnings revenue top estimates as Venmo gains traction. Q2 earnings beat, but expenses jumped. Cash flow slides. But my opinion on PayPal is that this is a good buying the dip opportunity in my personal opinion, and as always, not financial advice. I also had a trade that I did on PayPal that I wanted to tell you guys a little bit about. So before the earnings report, I already owned 400 shares of PayPal, which I'm still sitting on a profit, but of course with the downside here today, I've given back a little bit of those profits. However, to help combat the losses in the share price movement lower, I also sold a covered call, or the $86 strike price call, out to August 22nd of 2025. Now, when you sell a call, you're essentially renting out your shares to someone else who wants to make a bullish bet that PayPal is going to have a big move higher. But obviously, we did not get a big move higher. In fact, we got a big move lower. And so with this stock price fall, we actually see that those calls that I sold, which initially I sold them for $1.22 per share, so that's 400 times $1.22, are now only worth 12 cents. Because the stock price has dropped, those calls are significantly less valuable. So I'm sitting on an open P&L for shorting those calls of 90% of max profit, or $440. And my plan today inside of our VIP room where I share all of my trades is to close this one and take a profit on this trade. And I'm feeling pretty good about myself on this one because I actually sold those calls right towards the top just before earnings. And now with the share price dropping, I've gained 90% of max profit pretty quick on these calls. So the final question on this one, is PayPal a buying the dip opportunity? Well, as I showed you from the financials and my overall belief that Venmo and PayPal can still continue to grow pretty well and consistently over the coming years, I think PayPal is a buy for me personally. So if we do see continued push lower, I may actually choose to sell a cash secured put and essentially look to buy shares around the mid to low 60s range would be really attractive to me. This is the beauty of options because even though the stock price has mostly gone sideways, I've been able to make some income by shorting calls and selling cash secured puts. And let's talk about Spotify, which dropped big here today. We're looking at a move lower of almost 11% on Spotify. So the question is this a buying the dip opportunity? Unfortunately, we don't have Spotify in our new software, but this is a stock that I would like to add to our software tools, and we will likely have it in the future. Just a reminder, if you want to join us early before the price goes up on this tool, you can find out information about the stock box in the link in the description down below. Like I showed earlier, this tool allows us to track a ton of different financial metrics, technical reads like top gainers, top losers on the day, stocks breaking out to new highs or new lows on a 52-week basis, stocks setting up for pullbacks on a technical basis, as well as track crowd sentiment through the put to call ratios, tracking the options market on things like IWM, XLV, SMH, all sorts of different ETFs, and of course the SPY, QQQ, and the DIA. We can take a look at options volume to see if people in the markets are feeling more bullish or more bearish overall. To also track market sentiment, we can look at the AAII Investor Sentiment Survey, which shows us respondents' feelings on the markets, whether they're feeling bearish, neutral, or bullish. So if you want to check out our tool, make sure to use the links in the description down below to explore them for yourself. Spotify stock falls 7% on revenue miss and lackluster guidance. There's pretty much the story. Spotify beat expectations for quarterly revenue as paid subscribers climbed, but the stock slides on Q2 earnings loss and a weaker forecast after their recent record rally. And the challenge with a stock like Spotify is that it is a very expensive stock. It's not a cheap stock, and it definitely, even with this sell-off, is definitely still not cheap. You're talking about a company that is valued for a lot of future potential growth, and so when you get one missed earnings or one reported earnings that are just not very exciting, the stock can get punished pretty hard for it. However, from a technical basis, it is looking a little oversold here based on our extension zones indicator showing a little bit of weakness here. I would probably pass on this stock, even though I think it's a really cool technology and maybe a buyer if we were to see a much more substantial move lower, similar to companies like Palantir or Robinhood. These are companies that I think have so much potential, but the stock market is a very excited place right now. People are paying big bucks for companies like Hood, Spotify, Palantir, and while these are game-changing, powerful companies, you have to think about the risk to reward. I think if you're buying a Spotify or a SoFi or a Palantir, all these companies, they have massive potential for growth, but they also have substantial risk attached to them if things don't go as planned. Let me know what stocks you want me to cover in my next videos. Thank you very much for tuning in, and remember to subscribe if you're new. Thanks for watching.